Hello, I'm Erin Blaze. Welcome to The Truth About Real Estate. Today we're talking about title insurance, what it is and who needs it. And my special guests are Karen Brown and Bert Hughes. And they know quite a bit about about title insurance. They're from Boone Central Title. And the first thing I wanted to ask you is, I don't think a lot of people know what title insurance is. Could you explain what it is?
Well, title insurance is an insurance product, and what it does is it insures an owner of real estate that they have good title to a piece of property. And what that means is that it insures you against anything that's not disclosed by the public record that may affect the title to your property, such as undisclosed heirs in a probate, fraud, forgery in the past. Title insurance is different than a property casualty product. A property casualty product insures future actions, and title insurance actually insures what's happened in the past and how it can affect the title to your property. So basically title insurance ensures that you have good title to the real estate that you purchase.
Okay. And as a realtor, when I get a sales contract, the first thing I'll typically do is turn it over to a title insurance company so they can do some checking on it. And when I turn it in, what I get is a title commitment. Could you tell us the difference between the title commitment and the actual title insurance?
The title commitment is exactly that. It's a commitment to insure. It's also called a binder. So I think, you know, with your car insurance, sometimes you get a binder, or with your homeowner's insurance, and then you get the actual policy. So it is just a commitment to insure, assuming all these, there are requirements that are made on the title commitment, and we commit to insure assuming those requirements are met, and we can insure the policy.
They're basically three parts to a title insurance commitment. I would probably say. The first part of a title insurance commitment discloses actually who the actual owner of the property is, and then who the proposed insurer of the property is going to be, or who the buyer of the property is going to be. The second part of the title commitment basically discloses the requirements to close the particular transaction. An example of a requirement could be that you need a deed from the current owner to the new buyer. If there's a loan on the property, you'll need to file the deed of trust with the current lender on the property. And if there's a current loan that needs to be paid off, then we'll require a release of that current loan. And then the third part of a title commitment shows the exceptions to the property and the special exceptions to the property. An example of a special exception for a property would be a utility easement, access to the property, covenants and restrictions to the property, if it's in a neighborhood or whatnot. So.
Okay. So once you receive the order for the title work, how do you find out what the things are on the property that need to be taken care of, like the liens?
Well, we have what I call the research department, and the contract basically, or the order, goes down to them. They look at that piece of property, they search the recorder's records, the county recorder's records, they search the circuit court records, Circuit Court of Boone County, and then we have what we call a title plant, which is an index of all the recorded documents in the county, and they're indexed by the legal description. It's a geographical index, as opposed to what you find at the recorder's office, which is a name index. And so we do a double check through that geographical index by the legal description. And so the searchers put that search together, whatever they find that affects that particular piece of real estate, they put all that together, and then they send that to the title examiner. The examiner looks at all that stuff and determines what does in fact affect the property and what doesn't necessarily affect the property. And then they determine what the requirements are going to be made so that we can transfer property free and clear of any liens, and then the exceptions, which are matters that do affect the title that are of public record. So the examiner puts all that together, and then they're the ones that actually do the commitment. They're the ones that put all that information into the computer and print out the commitment.
Okay, so once the research is done, is that when you'll typically find if there's a problem that needs to be cleared up?
Yes, hopefully.
Okay.
Yeah.
All right.
Yeah.
And so actually, when I first started selling real estate in Cole County, they were still doing abstracts and updating the abstract. And some people still think, they don't understand why that's better. Could you, tell us a little bit about why title insurance is so much better than updating an abstract?
Well, when we did abstracts, an abstract is basically a recorded history of the property, from the patent, which is when the government sold it to the first owner, to up to present date. And it shows you all the recorded documents that affect the title to that property, anything that's recorded or filed in the circuit court. Then typically when that abstract was put together, then it would go to an attorney for an attorney's opinion. And the attorney would say, assuming the abstract to be complete and correct, you have good title to the title is clean. Well, when loans started to be sold on the secondary market, those lenders that the loans were being sold to said, we don't really want an abstract. And if there's a problem, the only person we can really go back on is this little abstract company and this attorney, local attorney. We want something from a big national company who has a lot of money, so if something goes wrong with the property that is the security for our lien, we want to be able to go to somebody that has deep pockets. So that's really how the whole title insurance thing gained ground. Because of the secondary market, as far as the lenders were concerned, then the owner's policies that just followed that it just became title insurance. Plus, it's faster.
Yeah, of course.
Yeah.
It's faster. All right, and
with the abstracts too, people still come to closings obviously with abstracts. So we encourage people to pass them along to the to the buyer, because it's great to look at.
They're fascinating, I think.
And it kind of gives some background and stuff.
Yeah.
And it's always kind of interesting to read.
Very old divorces would have, they had to be very explicit on why they wanted to get divorced. So you might see, well, he was a drunk and he ran around with loose women, and seriously, you would see that actually in the divorce, and which now all you see is irreconcilable differences, and so those are really interesting. And there were wills in some areas of Boone County, and I can't remember the name exactly, but wills where they would will their servants to their children. So you get into that whole part of history. It's an interesting little piece of history going through one of those things.
Sounds interesting. All right, so once you go to the closing and you're actually closed, you don't get your title insurance at that time, right?
No.
Okay. How come you don't get it at the closing?
Well, the documents that are signed and notarized at the closing, they have to be recorded at the recorder's office. And so we do that. We do a check of the records prior to closing to make sure nothing else has come up. And then we close, disperse the funds, record the documents, and then at that point, hopefully within a week or so, we'll be able to get the policy and the documents out to the appropriate parties.
Yeah, the person that's issuing the policy basically does a kind of a double check, just to make sure that all those requirements that are outlined on the actual commitment, are taken care of, just so that we can go ahead and issue the policy.
So when you get the policy, everything's done and final.
Right. That's exactly right. Yeah. It's recorded.
Right.
Yeah. It's
Okay.
done.
And so is that part of the reason you actually conduct the closing? Because sometimes people wonder, well, am I going to have to go run across town and pay off my loan or pay off these bills? But you guys coordinate all of it and take care of it.
Right. As a part of the closing service, what we do provide is that we prepare all of the documents to close, all of the seller's documents to close the transaction, which would include warranty deed, an affidavit, the 1099 reporting that needs to be done. We are responsible for reporting the sale, and the closing statements. We prepare those closing statements and coordinate, with the buyer's bank as far as getting all of those numbers together. And that's part of the closing service that we provide. And then on top of that, we handle the disbursement of the funds. So we take in all the funds, taking the funds from the lender, taking the funds from the buyer, and then disperse all those funds to the appropriate parties that are involved in the transaction, which includes, like you said, making the payoffs to the current seller's lender, paying the real estate commissions on the file, whatever disbursements are required, for that particular transaction. And then once the disbursements are done, of course, we pay the seller their proceeds, and of course, they don't ever want to leave the closing table
Right.
unless they actually have that physical check in hand.
I do like that check.
Which reminds me, I do have a story about. You always have, sellers that are, they're always waiting for the, obviously the check, the proceeds from the sale, and we had, I had one particular transaction where, you always joke, you hold on to that check before you get to the bank. And we had one particular seller that was leaving a closing, and they left the closing on a particular windy day.
Oh, no.
So they walked out the front of the building, and their check actually blew out of their hand, and it hit the front grille of the car that was running there on Broadway and went down the street. So,
Stop payment.
Yeah, so they actually came back in. They said, you're really not going to believe this. My dog didn't eat the check, but it's something else.
The car drove up with it.
There's always jokes about disbursement of the funds, I guess, sometimes. But,
the main thing is, I would say, with the title company actually closing the transaction and handling the money and dispersing the money, we know that payoff is being made. We know that if there are any other liens against that property, we're paying them off, and that way we don't have to wait for the release from Countrywide, or we don't have to wait for the release from the IRS on a federal tax lien or something like that. We know that it's paid off. We got the payoff in writing from whoever's supposed to be paid, and so we can turn around and go ahead and issue that title policy before we actually have those release documents in hand to record.
Okay.
And then down the road, if those documents don't get recorded, we follow up and make sure that they do.
Okay. So once you close, you get your title policy, but there are different kinds of policies. What's the difference between the actual owner's policy and the lender's policy?
Well, again, the owner's policy is ensuring the owner of the property that they have good title, and again, that they're, anybody that would come back, if there was a fraudulent deed in the history of the chain of title, if there was an undisclosed heir who came back and made a claim against the property, that's the sort of things that they're insured against. If we make a mistake, quite frankly, if we miss some unpaid taxes, and unfortunately we're human and that happens, but
if there's a typo in the legal description.
Yeah, things like that, and that ensures the owner of the property that they're going to be taken care of if these things do come up. The lender, the loan policy, which insures the lender, basically ensures they have a good first lien. It's not quite as much coverage as an owner's policy gives to the owner. It basically tells the lender, you have a good first lien. So in essence, if there was something that came up that was recorded ahead of that loan, the new loan, they would be insured that would be taken care of, and they would have a first lien on the property, that there's nothing out there that somebody could come back and foreclose ahead of them.
Okay.
And the owner's policy is a charge that's normally paid for in our area, although it's different, around the state. But in Boone County, it's normally a charge that's paid for, in most cases, by the seller. Although we've seen it negotiated different ways. And then the simultaneous issue, or the lender's policy charge, is a charge that's normally paid for by the buyer. That's how those charges are kind of normally split up.
Yep.
Transactions.
Is there any time limit on the policy, like a limit to how far back
Nope.
you're going to cover in time?
No.
Okay.
And it's good as long as you or your heirs own the property.
Okay.
And when you sell a property, a new policy is issued and paid for at that time. The premium, it's a one-time premium, and that policy is good as long as you or your heirs own the property.
How are the premiums set? How do you base the charges?
Oh, that's a good question.
Well, it's not based on the buyer's credit or anything like that.
No,
is it?
it's not.
Okay.
No, it's not. I've been in the business a long time, and there are what we call the national rates that were established by the large underwriters a long time ago. And basically we base our premium, the premium is based on that, and then we add our work fees, the search and exam, doc prep.
And the
that
premium
sort
varies
of thing.
based on the sales price of the property.
Yeah.
So, I mean,
And the loan policy is based on the loan amount.
Okay. Well, so what happens if you have a house and you've paid, say, a title policy based on $100,000, and then your house goes up in value, and then you have a claim? Is that still going to cover you for whatever the claim is from the person? Say it's a lost heir, because you're not going to lose your home, but your home is worth more than you paid for in the title policy.
Than it was. There are, on residential real estate, we issue with the owner's policies what we call an inflation endorsement. And don't ask me what that formula is on how they figured it, but that does factor in inflation. So if inflation's 2% or something, I guess, that I don't know how it works exactly, but that is covered. They also cover above and beyond the face value of the policy. They also pay your attorney's fees.
Oh, that's nice.
Yeah,
All right.
which sometimes can be more than the actual claim.
Yeah, I can imagine so.
Yeah.
Well, are there any claims? You always hear the urban legend about the guy, he put his house on the market, his wife was in Europe, and he brought his girlfriend in to sign and they took the money and blew it. Are there any claims that you know of here in town that have been actual claims similar to that, or any type of a claim?
Nothing locally like that. I have heard of a claim in California where people were out of town for an extended period of time and someone else sold their house. So they came back and somebody else was living in their house. So it may have been the same urban legend. I don't know.
Sheltered here in the Midwest, so we don't see a lot of the fraudulent type claims like that. But,
we see around here: mechanics lien claims.
That come up later?
Yeah, after a closing, mechanics lien in the state of Missouri is very favorable to the contractors, subcontractors, suppliers that are actually filing the lien. So that can come up 6 months after the closing.
So then what would happen in that case?
Well, typically what the title insurance company, the Chicago Title of the World or First American, they first look at all the information and make sure that the lien was in fact a good lien. Look at all the time frames, that sort of thing. And then if it was, then typically they'll negotiate with the lien holder and pay him off.
Okay.
Yeah.
All right. One big change that we've had here in Columbia is you used to be able to write a personal check at the closing, and now you can't. Now, does that mean, has title insurance changed? What's changed?
Well, what's changed is the laws in the state of Missouri. We had what we called a good funds law on the books prior to January 1st, 2008, which said that we could not accept personal checks in amounts over $10,000. Anything over $10,000 had to be what they define as good funds, which is a cashier's check from a bank, wire transfer. And with the new law that went into effect January 1st of 2008, the amount that we can accept now is less than $2,500.
Oh, okay.
And and in fact, the way the law was passed, there was no room for any personal checks. It had to all be good funds, but they've backed off that now through regulation. And so if you're sitting at the closing table and something changes, you have to have a $150 escrow for a broken window. Somebody can write a check, or we can't accept those.
There's always changes at the closing. I mean, there's a lot of things
Right.
that can happen, and so not allowing personal check or personal funds under that amount was just not a realistic thing. So it was good that they're in the
there was
process of making revision to that
right
law.
with all the mortgage things that you've been hearing about in the news, with all the foreclosures and things like that, and a lot of the mortgage companies having trouble keeping up. They just want to make sure that the funds are there.
Yeah, I mean, certified funds, that's a good thing, obviously. It protects everybody that's involved. So
Yeah, it does. Yeah, it does.
That was,
And, you used to have mortgage companies that wanted you to take their check, and you just had no idea if it was good or not.
Right. Yeah, have you had to deal with any lenders that went out of business while you were working on a file?
I don't think we have, that I can remember. Fortunately.
not locally, no.
Fortunately. We were, for a while there, we were getting memorandums from our title insurance companies that we represent on a daily basis, talking about the national mortgage brokers that were going out of business. So, and that don't take a check from this person.
Right.
So, yeah, it was, it's settled down now, but.
Okay. Well, I also want to ask you what your take is on the local market. I feel like at our office it's been getting a lot busier.
I think it is. And I know from, typically our busiest time is the end of the month, because everybody likes to close then. But, and the end of January, quite frankly, was not very busy. But the end of February was much busier. And so, and from what I understand from different agents, they're showing a lot of properties.
I am too, yeah.
Yeah, and it seems like the sellers are maybe becoming a little more realistic about the
more motivated
value of the property, or what the market will bear, whatever. So I'm cautiously optimistic that will be at least as good as last year.
I'm optimistic too. Yeah, I feel like I guess 2005 was probably our peak volume for the Board of Realtors, and then it declined quite a bit in 2006 and 2007.
Yeah.
But this year we've been pretty busy. Has it been the same for you all?
Yeah.
Do you think your peak was 2005?
Probably. Now we did have we had a bit of a, oh gosh, with the refinances, and I'm trying to think when that was. Was that 03?
Yeah,
it was 03, 04, 05, but not just the sales, but with the refis, that really helps our business because we do both. Yeah. So, but yeah, it did drop off dramatically in 06, and they've just kind of been plugging along.
We're going to have maybe a similar real estate year to what we had last year. I think it's we're hoping.
I tend to be more optimistic than I should be sometimes.
I think it's going to increase maybe.
I do.
Some, but
and Columbia is such a unique market that it's, you listen to the national news and it's doom and gloom, but Columbia is such an unusual market.
We're lucky here in this market, obviously, with we're somewhat sheltered, like she said, from some of the national trends because of the some of the industries that we have here, such as the colleges and universities that we have here, and the insurance industry that we have, and the hospitals. We constantly have people
coming and going
in the market, so that seems to help us in this area.
It does.
Yeah.
All right. Well, is there anything I didn't ask you about? Is there anything else you think we should cover about title insurance?
Oh, not that I can think of. Don't put me on the spot like that.
All right.
I don't know. You, Bert?
Thanks, Gary.
No, it's kind of an interesting product because it doesn't. It's a risk elimination type of insurance instead of a risk assumption like property casualty insurance is. So it's a little different, and people. It's difficult to understand, but we do, and that's another thing that's interesting about it, because we, on the local level, do most of the work. We don't actually pay the claims if there are any claims to be paid, but we do all the underwriting. We do the, searching, examining, underwriting, that sort of thing on a local level. So it's just it's a different product, but for when you think about the cost of closing a house transaction or a sale of a home, it does give you that added protection.
Yeah, we know this is something obviously that people don't do every day too. I mean, so people don't understand how this, obviously how this process works. So, we just like to, once as the real estate agent, gets the home sold, that that they turn it over to the title company, and we try to, along with the agent's help, try and hold the person's hand and take them through the process and make them feel at ease.
Right, make it go smoothly.
As smoothly
Right.
as possible. So usually if it's not memorable, not a memorable experience, it's usually a good experience.
That's good. Yeah.
So,
That is true.
yeah.
All right.
Yeah.
Well, you guys answered all my questions.
All right.
I appreciate it.
All right. Well, thanks for having us.
Sure.
Thank you.
Thanks for watching. This was Erin Blaze with The Truth About Real Estate, Title Insurance. Are you done?